What if the most ambitious upgrade in Polkadot's history ships this month, and the price doesn't even flinch? That's the question I can't shake. DOT is sitting near 90 cents, at all-time lows, while the team behind it just rewrote the entire engine from scratch. Today I'll show you why this chart is bearish, where the real invalidation sits, and the one signal in Bitcoin that decides if any of it matters. Let's get into it. Here's where we are. Polkadot has fallen from the number 7 spot all the way to number 37. Builders are walking away. Polkadot Africa, a funded regional arm of the ecosystem, just announced its closing after 5 months of silence. The sentiment is about as dark as it gets. And yet, underneath all that, something strange is happening. The codebase is the busiest it's been in 2 years. So we've got a network the market has completely written off, building harder than ever. That gap between what's being built and what's being priced is the entire story today. Hold that thought. It changes how you read everything that comes next. Let's start with the thing almost nobody's pricing in. It's called JAM, and it might be the most ambitious upgrade in crypto right now. Forget how blockchains normally work, where everything waits in one line, one block at a time. JAM throws out the queue. Work splits across more than 350 cores running in parallel. And here's the wild part. It doesn't run on crypto's usual engine. It runs on RISC-V, the same chip architecture inside the computer you're using right now. The targets are almost absurd. 1 million transactions per second, 2 petabytes of data. The testnet went live in January, and mainnet is next. While everyone screamed that Polkadot was dead, the team was quietly rebuilding the machine. But JAM is years out. The catalyst that actually matters this quarter is staking. Right now, governance is voting on a major change to how the network secures itself. Referendum 1890 would force validators to lock at least 10,000 DOT of their own funds as self-stake. Sounds boring. It isn't. Because it's the prerequisite for 2 things that strip out the biggest barriers in DOT staking. Nominators becoming unslashable, meaning your principal can no longer be punished for a validator's mistake, and fast unbonding, cutting the exit window from roughly 28 days down to as little as 2. The target is end of June, with minimum commission set to 0 at the same time. The runtime upgrade that enables all of this, version 2.3, has already passed and executed on-chain. Now watch how it passed. 135 votes, 0 opposition. Around 107 million DOT in favor, but support at just under 10% of a 1.66 billion DOT supply. A network-defining upgrade went through to an almost empty room. That tells you the holders who'd normally argue already left. And the data backs that up. Monthly active users sit around 37,000. That ranks 26th among Layer 1s, a 0.1% market share. Bitcoin barely processes transactions and still has 9.5 million users. So usage collapsed right alongside the price. Why did it collapse? A Cardano account, of all people, wrote the most honest post-mortem I've seen. Years of high inflation, aggressive treasury spending that forced DOT sales into the open market. Holders watched the money get spent, saw little adoption in return, and exited. Lower price, more frustration, more selling. A reflexive loop feeding on itself. The Treasury later cut spending by as much as 68%, but by then the damage was locked in. Then there's the institutional verdict. There's a spot DOT ETF. It has gathered under $2 million in total inflows, with net assets near 8.7 million. For a regulated product, that's effectively 0 demand. Now the contrast. Polkadot ranks 3rd in core developers, tied with Kusama, behind only Ethereum. Code commits just spiked to a 2-year high, 9th across all Layer 1s. They're shipping a self-custodial super app with on-chain identity and proof of personhood. They're prepping for a quantum-resistant future. And staking still pays 5.68%, with a minimum of a single DOT to join a pool. So here's the uncomfortable truth. The builders never stopped. The buyers did. Which one leads the price? That's where the chart comes in. Before we touch DOT, we have to talk about Bitcoin, because Bitcoin dictates this entire market. On the weekly, Bitcoin is trading around 65,000, and it's still holding its 200-week simple moving average. That green line is the floor for the whole risk-on trade. As long as it holds, Polkadot keeps a pulse. But if Bitcoin closes 2 or more weekly candles below it, that opens the door to a longer bear market, possibly stretching into the fourth quarter of 2026. On the way up, watch the 1618 Fibonacci near 72,000, then 2 descending trend lines falling from the all-time high. That's the macro roadmap. Now Polkadot. Zoom out and the picture is brutal. Price is pretty much trading below $1 in the last few days, at all-time lows, with no horizontal supports left underneath it. Below the 10 exponential moving average, the blue line. Below the 21, the red line. Below the 55, the purple line. Everything that should hold price up is now sitting above it, acting as resistance. Here's the part that matters most. Since September of 2025, DOT was coiling inside a falling wedge, those white dotted lines, getting tighter and tighter. In April, with price near $1.25, it confirmed a breakout to the upside. That should have been bullish. Instead, price came straight back and is now using that old broken resistance as support around $1. When a breakout fails to hold, and price clings to the very line it just escaped, that's a warning, not a win. It tells me sellers are still firmly in control. So where's the next real support? Honestly, there isn't a clean one until the 3618 fib extension at 85 cents. That level is behaving like a magnet, and I won't pretend otherwise. This chart is bearish. My Fibonacci is anchored from $3 last June up to $4.85 last September. On any bounce, the levels that matter are the 2618 at $1.37, then the 1618 at $2.23. Above that, wait 2 more descending trend lines, one from the December 2024 top near $11, and the bigger one from the 2021 peak at $55. But here's the open loop. Look at the Heikin-Ashi Relative Strength Index below price. It's still oversold, but it's climbing out of the extreme zone, and it's printing a bullish divergence. Price is carving lower lows, while the indicator carves higher lows. That yellow arrow is the one thing on this chart hinting the sellers are finally getting tired. So what am I actually doing? Let me be transparent. My DOT position is long-term, and it stays intact. I'm not liquidating here. This is a small slice of my book, capped under 3% of my entire crypto portfolio, and that cap is the whole point of my risk management. I built it through strategic accumulation around $4, again near $2.50, and small adds around $1.50, all documented on this channel. I'm not adding here, and I'm not de-risking either, because we're deeply oversold, and selling the lows is exactly what that reflexive loop wants you to do. My invalidation isn't a single price, it's a structure. If Bitcoin loses that 200-week line on a weekly close, the bearish case extends and patience gets a lot longer. To the upside, my take-profit ladder runs through $2.20, $3, $3.60, $4.80, $7.50, and $11. I trail my stop. First target hits, the stop moves to entry. Second target, it moves to target 1, and so on up the ladder. The chart decides the exits, not my emotions. So here's the thesis in 3 lines. Polkadot is building harder than almost anyone, while the market has fully checked out. The chart is bearish, 85 cents is the magnet, and Bitcoin holds the keys to any reversal. The moment that decides everything is whether real demand finally shows up once the engine is rebuilt. If this breakdown helped, hit like and subscribe. It genuinely moves the needle for the channel. And if you want a position beside me instead of just watching, that's what the Pro Capital Vault is for. Inside, you get my real-time portfolio tracking, my exact accumulation and de-risking zones, weekly live strategy calls, the Sunday prep report, and direct access to me. Join through the membership button below, use the link in the pinned comment, or scan the QR code on screen. Once you're in, just sync your YouTube account to Discord, and every private channel unlocks. Afterwards, it's not a pitch. It's the logical next step if you're serious about your positioning. Now I want your read. If Bitcoin loses that 200-week line, does DOT tag 85 cents, or does it go lower? Tell me in the comments. And if you're new here, go watch my last Polkadot video for the full thesis, because each one picks up where the last left off. None of this is financial advice. It's my analysis, my position, and my reasoning. Let the chart decide.